This is Boss Man from Swing Trade Snipers, and I'm back again with another video. In today's video, I would like to teach you guys what a fair value gap is in the stock market with the candlesticks. Okay. Um, First things first, y'all need to know is a fair value gap. In this example right here, we're gonna jump right into this, y'all. If you notice how you have an up candle, a down candle, right? And then you see this big green candle right here, okay? This is called a displacement candle. What is a displacement candle? If you look to the left, this candle, and as you see right here at the top of this candle, and then you go up to here to the top of that candle, well, actually half of the wick, okay? Send that to the back. This is called a fair value gap right here in this section. Now, let me zoom in for you guys so y'all can understand what's going on right here. This is going to change your trading forever. In this section right here, what's happening is it shot up so fast that the sellers didn't have opportunity to sell in this area. So you know how we get gaps overnight? It's kind of like that, but during the day. It shot up super fast, so it's a displacement. Because as you know, the candle's supposed to, when they take off, you want them to, I ain't gonna say you want them to, but they usually look like this. They take off, close, take off, right? Now, when you see a displacement, that means that the algorithm is going to reprice or is going to try to fake you out to get to an area real fast, okay? You see this happen a lot, but a lot of people don't know how to handle them. The way you handle them is you mark off your area right here. And then what happens is the stock goes up and then it'll come back down into it, okay? Right now, I'm just showing y'all on my board right here what it is, okay? That's like you going up, a little further up, same thing happened here. You always see, when you see the best way to think about this is this. When you see a big candle, look to the left, look to the right. To the left, mark off your wick right there. You can go wick to wick if you want to. And go to or if it's no wick, go to the bottom of the body, all right? And what happens is that becomes that's a fair value gap, okay? The stock has to come back to this area before it take off. So what I'm going to do is I'm going to show y'all some examples of how this works. And when y'all see this in the market, it's going to blow your mind of how you can trade off of this all day long. Because this is a footprint that the market makes that it can't hide it. Because so much money is in the market that when the algorithm takes off to go to it, and whether it's up or down, it has to make this displacement, because when it goes up and come back down, this is the area where the stock will be grabbing more money, more orders before it take off and go back up, okay? Or if it's like 2, it might skip this one and come down to this one. But the reason why it makes it is because if it keeps making it going up, it doesn't have to come all the way down here and get this money, because it was designed at that time to go up. So it keeps making these areas. And there are a few other ones. There's a volume imbalance. There's a breaker block. We have rejection blocks. We have different ones that we want to show you guys that the stock market respects these areas. So I'm going to stop here, and we're going to go over to the charts. And okay, so what I wanted to do was I wanted to bring you guys over to actual charts and show y'all that it works on any chart, okay? Any candlestick chart, we can find these fair value gaps. I'm going to zoom in on this day right here, okay? Real simple. Now, I'm going to take my Epic pen, and what we're going to do is I'm going to mark off areas for you guys and show you what I was talking about. Remember when I told you guys you look for a big candle? This candle right here, right? See, it dropped all the way down to there, right? Now watch this. You look to the left, you can mark off that wick right there, right? And you go to the right, right? If it's a big wick, you want to mark off half of it. Okay. Now, what happened in this section right here, this is the fair value gap. And as you can see, the stock came back up into it, went back down, came back up into it, went back down a little bit, came back up into it, and went through it and hit what's called the order block up here. But right now we're just talking about fair value gaps. But as you can see, the body still stayed in this area and it dropped back down. And what happens is orders are in here from when when it went down the first time, they couldn't get in. So they have to come back. The algorithm comes back to let these areas, remember, it's a fair value gap. It has to be fair value, meaning the red had their opportunity, now the green have their opportunity. And as you see, it came back up in this section, it ate up, loaded up, and then it went down again, okay? And then when it came back the second time, it went past it. Now, look to the left. Where did it go? Look at this big one. Left, right. See that? I'm gonna start using this from here so y'all can see it clearer. Okay, watch this. Left, right. You could draw it out into the future. You see that? This big candle was the displacement, wick to wick. This wick right here. Look how many times it hit it. Came back up into the fair value gap here, dropped. Came back up in here, dropped. Came back up in here, dropped. Came back up in here again, dropped again. From this fair value gap, y'all see that? But I bet you if you put a moving average on here, you'll usually see the 20 or the 8 right in that section. But this is actually what's happening. This is the footprint in the market. Now, you can go within these, it's doing the same thing. I'll erase this right here, right? Watch this. I want to show you guys. Okay. What you want to do is, when you learn the candlestick, you want to mark these areas off. And when you mark them off, they come back to them. Look, right here. Displacement candle. Real big. How do you know it's a displacement candle? Look to the left, see the wick? To the right, see the wick. If you have a gap in between it, like that one does, see that? That gap? That's the fair value gap. Look what happened. It went up. First it came down, ate up in there, took off, came back down here again, ate some more, okay? Took off again a little bit, came back again, ate some more, and then took off, okay? Now, came back down to here. Where did it come to? Right? If you look real close, there's one. Can I zoom in right here so y'all can see it? Look right here. Because if you go half, remember I said half of the wicks. When this one hit, you have a fair value. Now some people don't use the wicks. Some people will go like this. And you can do that too. You can actually hide the wicks and just go body to body. A lot of people do it that way too. That's the gap. See what happened? Back down here, hit that gap, it took back off again. Okay. Now the algorithm knows where the most money is at as it's moving. Okay. So it may not hit it. It actually was one here. Now listen, let me show y'all something. You see this displacement right here? All I know is the displacement. Look to the left, look to the right. Wick to wick. Okay, and what you do is, if you look, it did come down here and went up a little bit like that, you know, to just a little bit. Now, the orders that are in these gaps, the algorithm don't know how much, they just know it's there. So what they do is it comes down in these big candles. What they do is it's snatching your orders. That's what makes it shoot up so fast and go down so fast, because it's taking stop orders. When it went up from here to here, there's nothing but orders all up in here. So what happens is it came down, snatched everybody's orders real fast, came down to a fair value gap, and then took off again. And then it goes to the top and take out all these orders up top here. But the fair value gap is one of the best things you can use because it happens all day long. No matter when you see a candle reverse, most of the time that's where it's at. That's what it's doing. Like right here when it bounced, you have a fair value gap right here, right? Check this out. Boom. That one right there. See that? Left wick, no wick. The body, the top of the body, the wick, either way. Now with this one, it was a small, what's called a volume imbalance right here. We're not going to get into that right now, but there was one there. But my point was the fair value gap is here. Came down, hit it, went back up again. Where did it go up here? Here's the fair value gap here. Right there. Y'all see that? And he said that a lot of times it'll go and it's like painting. You know how you paint? And when you go over your paint, you go up a little bit higher. He said it's like that with the wicks. You go up and you go a little bit higher to make sure everything is going. See what happened? Bang, came right down. This is money in the option market, y'all. Okay? But you see it's respecting it. Now look, we had one fair value gap here, one fair value gap here. What did it do? It consolidate. Y'all see that? Until it ran out the orders, and then it goes a certain whatever way it's going to go. Okay? And we can keep moving on this all day long because it happens all the time. As you see this wick right here, it ate from this fair value gap. Okay? You have to learn what these fair value gaps is. So that's a little video on what a fair value gap is. And before we go, once again, when you see a displacement candle, you want to get the space, look to the left, look to the right. And if you see that space in between on that big candle, that's the fair value gap. Mark it off. When you see it come back, what you look for is your reversal signals. We'll get into another video on that, so you'll know what that is. So this is Boss Man from Swing Trade Snipers. I just wanted to show y'all what that was. We're going to see other videos on it, but if you got any questions, hit me up in the comments, and I'll see y'all in the next video. And remember, if you don't know where the liquidity is at, you are the liquidity. And that's what this fair value gaps is. When they make them, that's the liquidity. It's coming down to grab the money and then go the opposite way on both sides. So be checking me out for my next videos, and I'll holler.